Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered there too. Go ahead, send me an email. Steve@tfnn.com is the email address. Inside the subject heading, please put radio show question. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices trading in the red. The Dow's off 558, the S&P 80, the NASDAQ 301, the Russell down 32 points out there. And to begin our day, let's go out to Park City, Utah. Let's go out and speak with Peter. Peter, thanks for calling. Thanks for holding. How are you doing today?
Hey, I'm doing great, Steve. Thanks so much for the call. I first want to thank you for everything you do. It's pretty amazing the effects you've had on myself personally, as well as I'm sure many in the den with, the tools that you've taught us and how best to use them. And I put together a list, and it's kind of startling. And I do feel like the market turned yesterday.
Yes.
Even though the high was Friday or Thursday, one of the two. But, the VIX obviously is over the 50 EMA. And it was a little bit of a concern yesterday when that move was 10%.
Yes.
I used the DMI. I've got a negative cross there. The TD daily 9 count was a 9. Basil's Chapman wave was a D. We had a bearish engulfing candle yesterday at the close. It closed below the TAS, top of the TAS box, and now it's flirting with the middle. Been
Yes.
below most of the day. The RSI's got negative divergences to it. The AD line's under 150, I assume by now, with negative divergence. Then to Tom's volume, the volume on the 28th of February was 5.499 million contracts of 28.53, and we took the high out at 28.85 with 1.8, so about a third of the volume. And the entire market's been moving up on basically 5 to 8 stocks, which I read over the weekend. The top 5 stocks in the S&P composed of 22% of it.
Yes.
So having said that, on the daily counts, I was wondering if you could then look at both the 30-minute as well as the weekly so we can get a little better understanding of where we stand.
Sure. So, well, first of all,
I may have to put you. I may have to hang up. I'm not sure.
Okay, that's fine if you have to, no problem. But before you do that, I just wanted to let you know that you just qualified. You just won your winner chicken dinner because of that excellent presentation of the market out there. You now get to be the guest host.
Yeah, no, thank you.
So, so you can't hang up. You can't hang up. You gotta take it from here. But thank you for those kind compliments. Let's take a look at the 30-minute chart for the ES Mini first out here, and on it, it has been pushing lower over the course of the last couple of hours and doing it with less relative strength, setting up on a 30-minute basis the potential for a Rhodes momentum indicator bottom. Now, what we can see here, folks, and this is really important, is that so far this little rally, if we'll call it that, this little move off of the lows, probably better, is running right now on its 30-minute basis into what's called Stevie's red line. It's the oscillator unchanged line. So here's our first level of resistance inside the ES Mini. It's right around this 27.3450 area. So let's just call it 27.35. Let's not worry about a couple of ticks here. This is the first level on a 30-minute basis that we would need to see the ES Mini close above to then say, okay, I'm going to go to my next level of resistance out there. The next level of resistance on a 30-minute time frame would be 27.51. So that's what's going on intra-session. The market or buyers realized that price was pushed too far, too fast, with less energy out there, and so we may get a bounce. But watch that 27.35 area. So that's what I see when I take a look at the 30-minute time frame. On the weekly time frame, and here I'm just taking a look at the ES Mini. I'll switch over and see if we can go take a look at the weekly time frame for the S&P as well. But what we want to take a look at here, folks, is that same red line, red-green line that we were looking at on the 30-minute time frame. We now have it on the weekly time frame. And what you can see is last week, just by a smidgen, we saw the ES Mini close above that. And what Stevie likes to see is confirmation of any kind of a break of support or resistance. That's resistance, that red line out here. And we haven't gotten that this week. If anything, price has gotten right back below. And that level out there, Peter, that level, folks, that red line on the weekly was really communicating to us that is the area where the counter trend rally should have stopped. And in essence, it really did out there. Now, Peter had mentioned the in the S&P that yesterday was really the confirmed signal of the top, and it was really a Gartley sell pattern. Yes, it had the TD9 count, and then what we got yesterday was the bearish reversal candle, the bear sash, and now you're getting some follow through to the downside. Inside the S&P 500 on its daily time frame, 2677 may be its target out there. So that's on the S&P cash. Of course, we'll want to take a look at the ES Mini and take a look at where its possible support level, the bottom of its profile. Here, when we take a look at the S&P cash on a weekly basis out here, we'll see, in essence, really the same thing that we saw inside the ES Mini, where price had closed just by a smidgen, just above its oscillator and change line, but it's clearly below that now. And so that's confirming that this counter trend rally should be over. What did Peter? I think, are you still on the line?
I am. Yeah.
So what other?
Stevie, I'm dodging the toddler as we speak. That's why I was like, I may have to hang up if you got too loud.
I love it. I love it. Hey, look, I get the grandkids are over here, and every now and then they crash through my cave door, wanting to play or something. So I get it. I get it. But what piece of information can I provide to you that I haven't at this stage?
I don't know. I guess your overall feelings, just in general. I know you think we're taking out the lows, as I do.
Yes.
What indications would lead you to feel that has actually started? I guess. Is there any other things to look for that aren't as obvious? I guess.
So we're about to go to a break. If
Yep.
there's no reason why you're a child or grandchild. Hey, we're about to go to hard break. If you can hang on, and we'll be right back. Okay, all right, we'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tigers Den. For a limited time, you can get a 30-day free trial to the Tigers Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tigers Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tigers Den. The Tigers Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tigers Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tigers Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We're on the line with Peter in Park City. I believe we're still on line with Peter in Park City. Oh, perfect.
Yeah.
So you asked me the question, what other things could we look at to help us understand if, in fact, if I understand your question correctly, that the high from 3 days ago was that high of this counter trend rally and that we're going to head lower?
Exactly.
Okay. So there's a couple of things that we need to keep an eye on. One is going to be the support level for the ES Mini, and that's going to be the 2665 area. So this, because this chart is smaller, let me turn this on. It's much easier. I think it's easier to see on this chart, on the ES Mini, because the center of that box is closer in proximity to the bottom than it is to the top. This area that it's trading into is the bullish structured. If price is going to find support, it should be somewhere between the bottom at 2665 and the center where we're trading right now, 2735. So one confirmation that we're ready to head lower again would be busting out support. And so I think that 2665 level is really key. Another thing that we'd like to see is we'd like to see market breadth for all time frames be in the negative for the S&P 500. Now, this is the weekly chart here showing our market breadth. And just within the past hour, I believe, we've seen a bearish crossover. And what that means, Peter, what that means, folks, is that here, when we take a look at the market profiles, just like Peter and I just did for the ES Mini, for its daily time frame, those profiles which establish support and resistance out here, this tool takes a look at all the constituents inside the S&P 500 and lets us know how many are trading above resistance, so the top of the profile, how many are trading below support, the bottom of the profile. Well, in this case here, on a weekly basis, it's 63 above, 76 below. So this is a pretty good indication that this is market breadth negative for the weekly time frame. Of course, the week is not over out here, but this is an important piece of information for us. What we don't have right now, and it's really kind of lining up with the fact that price hasn't tested the support of the bottom of its daily profile, is we don't have a bearish crossover on the daily time frame. On the daily time frame, there's 115 equities that are trading above the top of their box and 81 below the bottom of their profile out there. So I think we just need to see overall market breadth for all the time frames. 60 and 240 are in bearish. We just saw a little bit of a crossover inside the weekly. I think we need to see the bearish crossover and market breadth on the daily time frame, and then the ability for price for sellers to be able to take out the 2665 level. If inside the ES mini they're unable to take out 2665, that doesn't mean we don't have a significant top in place. It just means we could be gyrating sideways for a while in between those levels. And I think that's a real possibility, Peter. Look, we don't always get what we want out there. And so far, I haven't gotten what I wanted, which was for the completion of a topping pattern inside of the Dow equity futures contract. So as you had mentioned, the Dow did get to that wave number 4, or letter D. And Basil teaches us that at that stage, something else can happen. So if we just continue with that, but that's the only pattern. I don't have a Gartley sell pattern unless I want to be very liberal with regard to the A to B equals CD pattern, and I don't really like to do that. But I'd rather, Peter, go with Basil's wave D. And what has that meant to us at this stage? And what that's meant to us is that price has only been able to push its way down into the bullish area of its profile. So if we go take a look at it, and that's the YM, folks. The YM, the Dow, what it did earlier today was so far it's tested and it's rejected the bottom of that box. Now, the low, granted, is only 22,814, and 22,757 is the bottom of the profile. But for my work, that's really kind of close enough out here. So even though we don't have the topping pattern inside of the Dow, the question is this just a 2-day push lower, a knee-jerk reaction lower? Not that we're still not going lower out here, but that this could set up a move. You can't bust them down. You try to bust them up back to the 23,967 area. Maybe it even somehow extends itself to complete the A to B equals CD. I don't know. But to me, it's the Dow that is the question mark right now. And the Dow, I believe, is extremely important to us because in a liquidity event, which is what we're going to get to again out here, it's really the big money, which we want to see the big money aspect of the market fall apart. And that would be the Dow. If we take a look at the Dow, we'll call that the big money or the international money. We call the S&P the U.S. money, and then we can call the NASDAQ the retail type trade out there, just in those three categories. And it's just so important for the Dow itself to fall apart, and so far it hasn't. Now, does any of that make sense to you, or?
Absolutely. No, absolutely. No, I mean, and it's early. It's obviously early to try to make a call for an intermediate term top. So the one thing, can we look at the NYA advanced decline line?
We can. I just want to throw one thing out there. We absolutely will, and I just want to throw the one thing out there where I can justify. You know what? Forget seeing a Gartley sell pattern or a TD9 count top or a Rhodes momentum indicator top out here, and that is that the Dow itself. And here I've got the Dow equity futures contract. If when this was making a bottom, if you and I were on the phone together and we were going to say, where's the counter trend rally going to end? We both would have picked out Stevie's red line. And we can see where the high of last week was a test and rejection of that level. So we may have, so in essence, even though I don't have the daily pattern out there, this is a clear indication that, in fact, that top may be in. Now, with regard to the New York Stock Exchange, folks, what Peter's asking about here, and I'm going to punch this up on my screen, is the advanced decline oscillator line. Is that the level is that what you wanted to first take a look at?
Well, no, just the AD line as it is relative to your charts with the VIX, et cetera. So I know it was over 150 yesterday slightly, and just curious where it is today.
So, okay. Yeah, so the advanced decline oscillator, which is the center panel out here. Yeah, and it's below zero right now. So here's how this works, folks. With regard to the zero line, this is the center panel I want you to focus on. And I want you to look at the red horizontal line. That represents the zero level. So generally speaking, when the advanced decline oscillator is above zero, the market is in the hands of the buyers out here. So this is our ability to interpret whose hands is the market really in. And that's very helpful, folks, because we need to be able to understand when a retracement is nothing more than a retracement back to support or what have you, or when it's something more serious. That's why we want to understand those support levels. So here inside the New York Stock Exchange, the signals that it was providing to us was that price was making a higher high, but the advanced decline oscillator was making a lower high, and that created the divergence that Peter had initially mentioned in the opening segment here. Now, here's how the advanced decline oscillator zero line is going to work. If we close below it today, the initial indication is that it may have shifted, which is that the New York Stock Exchange is in the hand of sellers. But kind of like my 2-day rule out there, if tomorrow it bounces back up, it was a false breakout to the downside with regard to sellers having control. Is that what you were looking for?
It was. I appreciate all your help, Steve. Thanks again so much.
Hey, you bet. Have a great day. Good to talk to you. Thanks for all those kind compliments at the open. And folks, we'll be back in just a few. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that have transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 522 right now. Let's go to, we've got a bunch of questions here that have lined up, so let's get to those. First one coming from Mike in Sarasota. Mike, nice to hear from you. Thanks for writing in. And Mike is in a trade in Netflix, so he wants us to take a look at Netflix, give an idea for where this is headed to. So if we take a look at Netflix, has done really well, obviously, during this coronavirus. And what it has done, it has completed a TD9 count. It did on bar number 8 out there. We can see that on our screen. What we don't, and you've got a key reversal session today, Mike. So let me just move over here. I don't think it's completed the A to B equals CD pattern. That would be the butterfly pattern. Maybe it's close, but let me just make sure. Let me come over here, take a look at Netflix. It's easier. In fact, on my the other version of the software, I haven't recreated the A to B equals CD tool just yet, just because I have it on other versions here. You know, give me a second here to give you the A to B equals CD pattern. Yeah, it did pay. Oh, it did absolutely do. It did. My apology. It did. So you've got a butterfly cell pattern. And that right now is based upon today's candle session. So I'm going to stay on this chart here for a moment, the black background. And if we take a look at it, you're going to see that its profiles. There's only two colored lines out here. There's the red line and then there's the green line. You're going to say, where's the cyan line, the center of the box? Well, occasionally the center of the box will stick itself, because remember, there's buyers and sellers located there. They believe there's fair value with inside the profile. And on occasion, you'll see them line up with sellers, or the center of the box line up with the bottom. That's what we have here. This is telling you, Mike, that 371.68 is a really strong level of support out here. Now, when a new profile forms, which it did 2 days ago, and it forms below price, it's a very bullish message out here. So, be paying attention to that. Yes, we have a top, but the first level of support, because 388.98 is the top of that daily box. So the first level of support that you would be watching is Stevie's green line. And, oh, geez, I grabbed the wrong chart out here. Sorry, that's going to be for another caller. Let me pull this back out here, Netflix. Let's get the right thing out here. It's going to be Stevie's green line. It's priced at 413.37. So you do have the bearish reversal candle. That's today. Got a bearish engulfing candle. You got a key reversal session. We've exceeded the high and low of yesterday. As long as we get one tick close lower in the direction lower of the open out there, you've got your confirmed butterfly sell pattern. So your first level of support is going to be the 413-ish area. Right now it says about 413.45 out there. So I hope that helps you. Let me read your question here a little bit further. You've got till Wednesday, Friday the 22nd through the 24th. If it can get to between 380 and 400. So that's a I've just got to take this, Mike, one step at a time, one level at a time. To get below 400, and it's a green line, and green tells you you've got a rising price oscillator. So price moving back there and just testing that will be important to you. So that's on Netflix. Take a look at a few other high flyers for you. Let me do that. And when I say high flyers, we're talking about, Peter had mentioned, the top 5 or 6 holdings with inside the NDX and the S&P being such a large weighting in that move higher. We can take a look at these top 6 holdings. So let's take a look at Microsoft as an example. Here's what I want you to be paying attention for, Mike. If we take a look at Microsoft, here we can see that yesterday was its clear signal of its Gartley sell pattern. So we've got the A to B equals CD. I'm just showing the butterfly wings here. You can see the TD9 count. Yesterday was the Three River Evening Star candle. That was a 3-candle formation. But what Microsoft has done so far, see how this oscillator and change line is green? Yes, intersession, price pushed down below it. I don't really care about that. Not that I don't care about that, but I know that on a daily candle, we really have to wait for the day to play out. It doesn't matter right now, even at 134, what it looks out. I can share with you, and I want to be able to share with Mike what to be paying attention to as well. But so far, the strongest equity, one of the strongest equities that are out there, not the strongest, but one of the strongest equities that are out there, Microsoft, valid topping patterns, 9 count, the Gartley sell pattern, but so far sellers have only been able to push price down to support that 168.20-ish type area out here. And if price can hold that, price can make its way back up to the recent high from just a few days ago. Whereas if price closes below 168.20 or so, then what price should do is make its way to 164.07. But so far at this stage here, this is a bullish test. Yes, we've got this, and this is where then you kind of get to neutral on Microsoft. can it bust out? Can it bust out through support, or can it take out resistance out here? So right now, price is trading in between support and resistance, that green line level. And so what we can say, Mike, you and I can say is, hey, Netflix is stronger than Microsoft. Let's take a look at Amazon. Let's take a look at Apple. Let's just take a look at Apple and see what it's done. So in the case of Apple, its oscillator and change line is red. What does that mean? Well, that's a different pattern setup. First, it means that the price oscillator is below zero. So, and I like to have fewer things. I already have enough on my screen, I think, that could confuse most people. So the idea is to limit the amount of things that are on the screen. I don't need the price oscillator at the bottom to let me know what's going on, because I went ahead and changed it so the color of the line will change, and then I know where that's at. So a price oscillator that's below zero, if price is then below the oscillator and change line, it tells me and you that we have a falling price oscillator below zero. And so Apple's a little bit more bearish. If price were to close below that level, by the way, is 266.90. It's going to change by pennies as price moves up and down. So price here, inside of Apple, it's got a TD9 count top. Price is trading below the bottom of its daily profile. Ordinarily, that would be bearish out here. And folks, if you didn't use Stevie's red line, you might be pressing on those shorts out there. And I would say, hey, hold your horses here. You've got to know where Stevie's red line is. And you can learn about it. You can subscribe to Mastering Probability. I've got a workshop that'll teach you about that. You can customize this line on your software if you want. You can calculate it on a daily basis so you know where it's at out there. And I teach you all that stuff in the workshop. So prices bust through one level of support, but now the second level of support inside of Apple has held. If price closes below that level, where's price going to head to? Exactly. The giveaway was it's made a TD9 count top, so we know that it would head down to the breakout level, which is 249.38. So again, take a look at the weekend to see, because we said, hey, look, the NASDAQ is trading below the bottom of its daily profile. It almost says, hey, jump aboard, go to the short side. And Stevie's saying, just hold on a second here. It's not that long term we're not headed lower. It's just hold on a second here. If we take a look at Amazon, just these three make up a substantial portion of the NDX 100. This has created a butterfly sell pattern. I don't have it colored in out here. It was about a 1 to 1.6188 to be equal CD to the upside, a TD9 count. And in the pullback out here, price hasn't even tested a level of support, which is 22.47 in change out here. So Amazon looks pretty good as we speak so far. So here's what we've learned. Microsoft, Apple, Amazon have held key levels of support so far. Let's go take a look at Google. What is it doing? It's got a TD9 count top. Today is the gap to the downside, which confirms its Gartley sell pattern. But price must close below 11.97 out there. It's trading right now at the bottom of its box, or just slightly below it out here. But 11.97 is the key area. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go on to our next question. This one coming in from Tim. Tim says, recently received some Visa shares out there. Is this a hold or a sell? Let's go take a look at Visa out here. And of course, it's going to be dependent upon your time frame. So let me give you what's going on for all three time frames, at least with regard to support and resistance. And then I'll take a look at my other charts and we'll figure out if there was some kind of sell signal or bottoming pattern or what have you. But right now, what price is doing, it's just trading in between support and resistance on its daily time frame. So basically, you're consolidating sideways after coming off of the low. Price is pulled back. The level you'd be watching on the daily time frame is 156.64. A close below 156.64 would suggest to move back to at least the 140, 141 level. The 141, it's really 141.95 is the bottom of the weekly profile. 140.44 is the bottom of the monthly profile. So that you can see out here, Tim, on the longer term basis, the retracement inside of Visa on a monthly chart out here held support. And this is the monthly time frame. You're taking a look at all of its profiles. What you have not seen inside of Visa is a close below the bottom of a profile, 140.44. So if I guess if it were me out here, it wouldn't really necessarily want to. Well, again, I don't have all your background information here, but Visa's still bullish until you see a monthly close below 140.44. I think that's relatively clear from this chart out here. So you received it as an inheritance. If you wanted to hold it for a longer period of time, I get that. If you're looking for something else, well, the something else, let's just take a look at the other chart patterns out here for Visa. And Visa on its daily time frame confirmed a Rhodes Momentum Indicator top. So it did that. We saw the level of where price found support. This is the weekly time frame. So here's a weekly TD9 count top. We can see price coming back to one of its breakout levels. These are the red horizontal lines. But what was important was that monthly level that actually held out here. Let's take a look at the daily time frame for Visa, get a feel for what we have here. We can see the Rhodes Momentum Indicator bottom. And then it looks like pretty much an A to B equals CD to the upside, a Gartley sell pattern. Price right now is sitting on Stevie's red line, Tim, on the daily basis, right at about 161 and change out there. So no reason here just to sell. But because that line is red, if price closes below that, then what I want you to anticipate is that it's signaling to you that the bottom of the daily profile will get tested. That is 156.64. out there. So I hope that helps you with regard to Visa at least and what it's doing. I would need to see a break of support, I suppose, to tell you to go ahead and sell, and we don't have that. So watch 156.64 out there. We've got a request here from Mike in Niagara Falls. Mikey says, why hasn't the XOP gone south with the major indices? Well, the answer to that would be because of the holdings inside it. So here, if we take a look at XOP, let's put this up on the screen out here. That's the S&P oil and gas exploration companies that represent this out here. You can see it's trading from a daily basis right into resistance. Resistance being the top of its profile out here. It's a profile that formed yesterday. So I don't know if you're in this, not in this, Mike, but 43.18 is resistance and 38.47 is support. Now, the number one holding, just to give you an idea, and each of you can do this, and you should do this for any ETF that you trade. You know, I say that all the time, and so I'm going to say it this time too. Here, if we just go to Yahoo, so I think this is updated through yesterday, might have been, or the day before. Oh, it's Tuesday. It would have to be yesterday. So you've got a Cabot Oil and Gas, COG, that represents 7% of the XOP. EQT Corp, that's a 5%. EQT is the ticker symbol. Southwestern Energy, 5%. Chevron, CVX, and ExxonMobil. So it's really, what are the instruments within inside the ETF doing? Not saying, hey, because oil's moving south, that therefore these equities need to move south. Here, we'll just take a look at Cabot Oil and Gas. I'll just start with the top one. And so Cabot, not Abbott, but Cabot Oil and Gas here. It doesn't have a top. So today's a little bit of a higher high. Yesterday would have been the TD9 count out here. There's an A to B equals CD pattern, but there's no bearish reversal candle. So I can't even call this a top here for its daily time frame. Mike, I don't have, I would need to see. Now, you could get a dark cloud cover candle today. Just depends on, it needs to close probably at the lows of where it had gotten to today, or a little bit lower. So if you did get a bearish reversal candle, then this would be giving you a topping signal. But with regard to XOP not going south with the other indices, what was the second one that was out here? It was EQT. Let's just take a quick peek at EQT. And so this is what you would do, each of you would do in trading these equities or trading the ETFs, want to understand what's going on underneath the covers. That's why Peter and I were taking a look at the market breadth for the S&P 500, just understanding where are instruments within inside the S&P 500 trading in relationship to support and resistance. And here, certainly no top in sight for EQT out here. And so I say, Mike, just pay attention to the instruments. Usually it's just the top 5 or top 10 that you would take a look at, and that will always answer your question, I think, as to why. So I hope that helps you out. Next question here coming in. Oh boy, that's small. Coming in from a cell phone to a cell phone. That's okay. I got an USO yesterday, wanted to exit the trade. Can you see how high it can bounce to? Yikes. How high it can bounce to? Man, that is playing with fire. So far, I don't see any kind of bottom out here inside of USO. So trading out at 236. And so I would be asking the question, how low can it go? Not how high can it go? I don't see a bottom. Do I see a bottom inside of light sweet crude? All right, that would be another question at least to ask. And if we take a look at our crude, all of our forward futures contracts for the next year plus out here, you can see where the instruments. Now, it should be the June contract, I believe that's that should have been rolled over, or will be by the end of the day, should be the primary, not all the holdings, because it's got U.S. Treasury holdings out there. But with regard to light sweet crude, it's going to be the June contract, in essence, that you would be taking a look at. And in the bottom left-hand panel is the June crude oil contract, trading out at 690. Yeah, 690. 690 as we speak. Now, on this chart, you can see June. That's the lower left. You can see July. That's next to it. You can see August. And then you can see September on the lower right. I don't have to go look at a short-term time frame to tell you there's no bottom signal out here, because we're sitting at the lows. So USO, with regard to how high could it bounce, man, I really think you've got to ask yourself the question, how low can it go? That's really the question out there. So I hope that I helped you out with regard to that. I don't see a bottom pattern that is formed for any time frame. Mimi writes in, she wants to take a look at, well, Netflix and SCO. So SCO would be the short of oil out here. And I think you're playing with, I think anybody playing in this patch right now, you're playing with extreme fire. Just think of it like this. You're up against Vladimir Putin and you're up against the Saudis out here, they're just trying to crush shale. Who wants to play in this game right now? Nobody should be playing in this game. Let oil go. Look for something else. Steve Rhodes with TFNN. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Now, I do want to be able to pass this along to Mimi, who's been short, apparently is short oil via SCO. And so if you're in this position, I want you to know that today is going to be bar number 8 of a TD9 count. And we know that in the TD9 count, when it identifies tops or bottoms, it'll be either bar 8, 9, or the bar following 9. So that's today, tomorrow, or Thursday, where you could or should see a top with regard to that pattern. If you're in this trade, you know, I'd consider a lot of what has transpired a gift out here, and I'd consider, you know, taking your profits out there just simply based upon that. So hopefully that helps you out. Let's go to our last question out here. Last question is coming in from Eddie. Eddie says, what would reverse your bearish outlook on the markets out here? What would reverse my outlook from the bearish standpoint? So there's really, I guess there would be 2 things. One, the market has to find a bottom. Oh, gee, Steve, well, that's really pretty cool. What I mean by that is, Eddie, let me be really clear to you and everybody else in the audience that's listening. And it doesn't matter to me that, some of these are charts that I've shared with subscribers out here, because one of our roles is to help protect your ass. That's really what it is out here. And there's a lot of stuff that I hear, that you hear from talking heads out there. And what I do is I like to just present you with facts. If I present you with facts, then you can go ahead and get rid of all the noise. So let me share with you this. Over the course of the last 100 years, when markets, the Dow specifically, when it makes significant bottoms, it does it along with gross domestic product. Not anything that we really talk about here a lot, but GDP. Here's your 1929. We didn't see the market bottom until 1932. This is an annual chart, so you can easily take a look at it. And here we can take a look at the 2009 bottom. We can take a look at 1970, 74, 82, all of these bottoms, 2002. So that's the very first thing. We're out of time, and you'll have to tune in tomorrow, and I'll give you the second thing. But folks, prepare for economic winter, and I'm serious about that. Have a great day. We'll see you tomorrow on Wonderful Wednesday.